Welcome to the Daily Brief, where I'll go over the action in the market for Tuesday, February 7th, and then we'll see how things look for Wednesday, February 8th. We had a surprisingly strong up day. A lot of that was pretty much attributed to two things. Number one, the market seemed to like what Chair Powell was saying at his speech. He didn't really throw anything surprising into the markets. There was a little bit in there that caused the markets to decline. The second thing was when we hit that 4,100 level, a lot of buying really came in and pushed prices higher going into the close. So let's go back and talk about what happened. Right at the open, we had a lower open. Prices drifted above and below the daily pivot at 4110 and also the unchanged level. They were almost on top of each other. As the day went on, prices shot up above R1 at 4126 and R2 at 4141. Then we saw the retreat coming in. We fell all the way down to below S1 at 4,095. When we hit that 4,100 level, or right around there, prices shot all the way up to R3 at 4,172, and we closed near the high. We were up 1.29% on above average volume. The technicals are still positive overall, but there's some weaknesses that are starting to develop in our charts, and I'll go through and show you those. The ADX continues to climb, so we're in a positive trend environment, but any kind of a decline could shove us right back down into a trendless environment. Inflation and interest rates are the real fixation of the markets. The earnings per share, valuation concerns, the earnings as they're being released, that's kind of the forefront of the news right now, and we want to keep an eye on the geopolitical concerns. The Fed speak we got on Tuesday, we'll be getting some more on Wednesday, but it's not from Chair Powell. And then the debt ceiling debate continues to go back and forth. Here's the daily chart showing how we had a lower open. There wasn't much of a gap. We came right down to this 4,100 level. We held up at that level pretty well, but we went above the daily pivot and the unchanged level, and then right back down to the unchanged level. Then prices shot up. The market initially liked what Chair Powell was saying, but then quickly reversed course and shot back down to S1. Once we got down around this 4,100 level and even below that, that's when buying came in and then shot us up a lot higher, going up to R3 and closing just a bit off of the high. Some comments that we can make. Chair Powell gave a speech on Tuesday, didn't really surprise the markets, but we saw a lot of whipsaw movement as he was talking. Buying then entered at 4,100, which produced a rally going into the close. Growth did outperform value. We want to ask this question, is weakness starting to develop? We're starting to see that in some of the charts, and I will show you that. On the short-term basis, our stochastics are looking pretty extreme. We are back now again with the Sean trend meter looking extreme, as well as the CCI 20. Long-term, we're still battling the 150 and 200-day moving averages. The dollar was down slightly and interest rates were up. We still have all of our yield curves that are inverted. Sentiment is still extreme at 77. It had been at 79, but then ticked down just a little bit to 77. So we're looking to see, are we getting a little too far ahead as far as a sentiment basis is concerned? I'll look at the economic reports on the next slide. Our trend is positive and getting stronger. The ADX is going up. We're above 20. Our bias is now positive with the up day. And I've kept our momentum at mixed just because there didn't seem to be an awful lot of conviction behind the move. Yeah, we went up and we even saw volume above average, but was there real conviction in the prices moving higher? It just seems like we shot up, and a lot of that could have been short covering. And then you still have FOMO, the fear of missing out, where people are just jumping in saying, oh, the market's going up, I have to get in, and not necessarily using charts to make those decisions. The economic reports that came out, we had the trade balance. It came in at a minus $67.4 billion. That was less than the $68.5 billion that they had expected. The last time we had this report, it came in at minus $61 billion. And consumer credit, it did increase, but not nearly as much as they thought it was going to. It increased by $11.6 billion. They expected it to be more than double that at $24.5 billion. The last time we had this report, it came in at $33.1 billion. Here's a screenshot just showing how growth over on the right-hand side really outperformed value. They both did well, but growth really outperformed. You can see it also outperform with the mid caps, and not as much, but still outperform with the small caps. The Ultra Index still suggests that there's not a lot of fear in the market. The VIX did decline with an update. We're well below 20 and declining right now. Remember, when the VIX is low, it's time to go. So there's a lot of complacency going on right now. And people are just watching this going, but the market should be going down. We need the VIX to go up higher. And for a number of days now, it just hasn't been doing that. Our ADX continues to go up. It's above the moving average. The green line's on top, so that's positive. The daily chart shows how we're just underneath this resistance level that we bumped into last week before falling back. Are we going to be able to go above this R1 level, or are we going to see some weakness coming into the market? We do have other areas that we broke through that now could act as potential support if we continue to fall. We also see here a recent golden cross. That's positive, and we're above the trend line, which is also positive. Down at the bottom, we see where volume ticked up, and it was above average. Our moving average study shows a little bit of a tick up with the 20 and 50, as well as the 200-day exponential moving averages. Stochastic still looking extreme in the short term, coming down a bit, but still extreme in the intermediate term, and turning back up in the long short-term version of this chart. So we're pretty extreme as far as the stochastics are concerned. Williams percent R, after ticking back down below this minus 20 level, we've gone back up. The Stoch RSI is not extreme positive yet. This is the only chart showing that currently. Our slope, we're kind of keeping an eye on this. We've just been floating around going sideways, a little bit above, a little bit below the moving average. It's the only one of our oscillators that's showing any kind of weakness. The BPI, after going extreme above 70, didn't really tick up with the upward movement because we've been here before, but we really didn't show any weakness as we were going lower. So this is positive overall, but starting to look extreme. The NYSE bullish percent index, after breaking out, did see a little bit of a decline, but this is still positive overall. This is one warning sign. We've been going up in a pretty healthy way, but we're now seeing the first dot on top with the parabolic SAR. Now, this could always shift back if we break out, but to see this, even when we've been going up overall, is kind of a warning sign and could suggest some weakness coming into the market. Chicken money flow really broke out a little bit here and is quite positive. The CCI, based on 20 periods, after trying to come back down, has now shifted back up slightly. The CMB Composite Index, it hasn't crossed the second line yet, so that's not a confirmed sell. TTM Squeeze still showing the darker looking blue bars, but it's still positive overall. Our short-term fib level, after coming back down below this 100% retracement, we were able to break back above that. Here's a longer look going back to the all-time high, to the October low. We're still flirting right around these levels. This is at about 41.52 or 53, where we closed at 41.64. So we're a little above this 50% retracement level. Longer term, we still have some overhead resistance at 42.14, and we also have support at the 40.20 level. The NASDAQ, after coming back up to the 38.2% retracement, bounced back down and has not gone back up to that level again, so this may continue to provide some overhead resistance if we go up. The Swinland Trading Oscillator, based on price and volume, did decline. That could be another little warning sign. Sometimes this tends to lead price, so we just want to keep an eye on that. We're well above all the moving averages in our moving average tree, and the longer we can stay above that, the more positive these moving averages will look. The Elder Impulse for the S&P 500 continues to be neutral, even though we had a pretty strong upward move. The McClellan Oscillator, which dipped a little below zero, has now gone back above zero. That's positive. Summation Index based on price is going up a little bit, and we're still pretty much flat after hitting this extreme reading based on volume. This could be another potential area of weakness. We're coming back up to this level and running into some trouble. We could see things start to turn down from here, or are we going to be able to break through and go higher? The Sean Trend Meter, after coming back down from an extreme positive reading, is still in that extreme positive territory. Didn't really see much in the way of new highs and new lows, so our 5 period, even though it's rolling over, is still positive, and we're flat to slightly declining with our 10 period. The advanced decline line, based on price, continues to hold up, as well as volume. Accumulation distribution, haven't shown this in a while. We're above the moving average and going up, but we're getting kind of far away from this moving average. Just want to be aware of that. The copy curve still continues to generate a buy signal that was first generated back in early January. Here's the moving average study for the longer term. The 150 is turning back up in extreme, as is the 200 simple moving average. The Dow was able to get back above this pivot level and close above that level, also above the 50 period moving average. That's positive, and the Dow's been holding up. But this real nice run up that we saw last fall, that isn't what's happening right now. We're pretty much chopping sideways with the Dow. The diamonds are back to being positive after being neutral for 3 days. We'll have to see, can the Dow break out, or is it going to continue to consolidate sideways? The NASDAQ 100 is right back up to this R1 level. We're a little bit above the R1 level based on the NASDAQ 100. The Qs are still neutral, even though they were up over 2% in Tuesday's session. The small caps, after coming up to this R1 level and then falling back down, are coming back up now, and we're just underneath the R1 level. And the mid caps, after hitting resistance and coming back down, did show a pretty nice rebound. They were up 0.73%. And the Wilshire is starting to give us a golden cross. We're above both moving averages. This is a broader based measurement, so this is positive. The home builders continue to go pretty much hand in hand with the S&P. The S&P has been going up. The home builders turn back up slightly. The ratio continues to just tick up a little bit, and the correlation is still very strong between the two. Looking at some of our possible positive scenarios, we're still above this zero line and going up with our moving average of the highs minus the lows. So that's positive, but that's longer term. And here's the chart with the indicator on top where it shows that we're above zero. I showed this in yesterday's video, the 10-day average of the S&P 500 highs minus the lows. We're getting a little extreme here, and we've been reading this level for a couple of days now, and that could suggest some exhaustion. We'll be watching to see if that produces some kind of a reversal. The broad-based measurement of the highs minus the lows, we're above zero and advancing, so that is positive overall. Looking at shorter-term government bonds, with a ratio against the investment grade bonds, we're turning back up. We're showing a little bit more fear here, but overall it's still been declining. The S&P 500 to the utilities ratio shows the S&P has been outperforming utilities, and this is positive. And the high beta stocks are starting to go back up and really outperform when compared to the S&P 500 equal weight index. The equal weight index treats every stock as the same, unlike the S&P 500, which is a weighted index, so the big companies have more influence. Our staples, this is still looking viable, where we spiked up and are coming down, and this continues to fall overall. Looking at some long-term trend analysis, this is a new chart. This is a moving average of the equity put-call ratio, and it's 253 period moving average, because there's roughly that many trading days in a year. This takes a long time to turn, but once it turns, it tends to go in the same direction. Where for a lot of 2022, this has been going up. Well, we're just starting to see a little tick of a rollover here, so we'll be keeping an eye on that. If this rolls over and starts to go down, that could give some additional support to the S&P, and a lot of times this marked a bottom in the S&P. Hasn't really shown that yet, so we'll just be keeping an eye on that. The NYSE composite with the record high percent index after hitting a bottom has been turning back up, and that could give some support to the NYSE, which also could help the S&P 500. Here's the S&P 500 monthly chart with the PPO on the bottom. It's starting to turn back up. That could be positive. And the S&P 500, looking at the ratio between the S&P and the CRB index, is starting to turn back up and getting close to crossing above the moving average, and that would be positive as well. The S&P 500 to the Dow Jones Global Index, a monthly chart, we're still looking a little bit like we're declining with the KST, but we're above this red line on the chart up above. We'll want to keep an eye on that. So what's our outlook then for Wednesday? The technicals are still positive overall. We're above support, but we're keeping an eye on this because we're possibly becoming short as well as intermediate term overbought if we continue to go much higher. But at the same time, we're seeing some signs of weakness, especially that parabolic SAR. The fact that it has a dot above, that doesn't usually happen that way. So it's seeing something that we're not really picking up by just looking at a bar chart. So we're watching to see, is some kind of a reversal going to develop? It could come and go and be nothing, but we just want to keep an eye on that. We have the weekly MBA mortgage index will be coming out, as well as wholesale inventories. Not a huge day as far as economic reports. We keep an eye on all the geopolitical events, inflation, interest rates. That's the focus of the market. Earnings as they're released by each company. We will be getting some more Fed speak in Wednesday's session, so I'll have that to talk about. Looking at the Stock Traders Almanac statistics, the one that I'm really focusing on without reading through this whole chart is for February 8th. We tend to be more negative with the Dow. It's only up 47.6% of the time. But the S&P and NASDAQ, they're more positive. They're up 61.9% of the time. And I'll just quickly go through this because I talk about this in every video. Then some Fed speak. We did get some on Tuesday, and that was Chairperson Powell that was speaking. That's why I have this in blue. On Wednesday, we have Michael Barr, who will be speaking. We'll also have Christopher Waller, who will be giving a speech. They're not the chair, so what they say is not taken as important as Chairperson Powell, but we still want to see what they say anyway. And then on Friday, there will be another speech by Christopher Waller. So our scenarios, kind of hard to go with the down one right now because the technicals are positive. We're above support. However, we could be getting to a point where we're becoming overbought again. We worked off a lot of the overbought condition, but with that solid update that we saw on Tuesday, we're kind of getting right back into it without really working off that condition. We could go with the up scenario, but we could be getting overbought. So we might see some exhaustion and we still have some resistance above where we're at right now. But our ADX is above 20 and advancing. You could default with the up scenario because that's what our charts are telling us. But at the same time, if we see a real decline, that could throw us right back into a sideways environment. So our conclusion, the S&P is positive. We're above support. It's possibly becoming overbought. We're watching for more signs of a reversal. In the short term, again, we're positive, but looking a little toppy right now, as well as intermediate term. Long term, we're above that 200-day moving average. We just had a recent golden cross, so that is turning more positive. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.